Hi, my name is Kevin Feig. I'm the founder of Walk You to Wealth. I wanted to spend just a few minutes talking about the next recession. I have no idea when the next recession will be. No one can truly predict it, and no one can predict the bottom of the stock market, the top of the market, especially not accurately and not consistently. But recessions are inevitable. They're just part of the natural cycle. And so what you want to do is figure out how to best prepare yourself for when it does happen. The three best ways: one, have an emergency fund. Emergency fund and the size of your emergency fund will depend drastically based on your situation. But if you're working and you're actively employed, anywhere between 3 to 6 months is generally recommended. If you're retired, anywhere between 12 to 36 months. And again, there will be so many different factors involved here: level of wealth, spending, fixed income that you may have coming in, social security, other income streams such as rental properties, etc. But you want to make sure you have a fully stocked emergency fund. Next, if you are panicked, one, it's a natural human emotion. If you're nervous, if you're logging into your account every 10 minutes, if you're checking the markets all the time, if you're losing sleep at night, it's probably a sign that you should check your asset allocation. It's probably a sign that you're invested too aggressively. And not necessarily too aggressively for a recession, but too aggressively for your personality. Meaning if you're a fairly conservative person by nature and you're invested too aggressively, there's a mismatch. And that will truly show itself during times such as a recession, because you're more likely to panic sell, and sometimes never return to the market again. So again, you want to review your asset allocation, but you want to be thoughtful about it. You want to understand that if you are panicked, if you are nervous, if you're losing sleep, it's probably a sign you're invested too aggressively. And that's something you should evaluate, hopefully with the help of a financial advisor. Lastly, zoom out. If you have 15, 20, 25 years until retirement, if that's what you need this money for, just know that this is inevitable, and it's also going to be a blip on the radar. Much like if you go back to 2008. I was working at Fidelity Investments in 2008, and it truly felt like the world was ending. Between the real estate market, the stock market, the employment market, etc. That's how it felt, right, emotionally. When you look back at this chart on the S&P 500, it's hard to even find 2008. And that just shows you need to zoom out. So again, top three: have an emergency fund, 3 to 6 months, 12 to 36 if you're retired. Review your asset allocation if you are panicked, if you are nervous, but try not to react, try not to panic sell. And lastly, zoom out. What's your time frame? What's your time horizon when you actually need this money? Hope that was helpful.
The information in this video is provided for your convenience only and is not intended to be treated as financial, investment, tax, or other advice. The information is intended to be educational and is not tailored to the investment needs of any specific individual. It is also not intended to be relied upon as a forecast and is not an offer or solicitation to buy or sell any securities or to adopt any investment strategy. The opinions expressed are those of the author. Reliance upon the guidance and information in this presentation is at the sole discretion of the individual.